Welcome back now to our next conversation. We see global stock markets have been quite volatile with headwinds. Still watching markets right now with investors, looking at risk off again at this point. So we're going to check, what the investor pulse is looking like right now. Joining us now is Shino Lubu, economist and investment consultant, joining us right now from Edmonton. Great to have you on the program.
Be here. Ladi, how are you doing today?
I'm good. Great to have you. So I know this has been a tough year, for investors. And now, we've had the war in Ukraine. Now there's talk about the monkey pox, also, in the works at this time. But what are you seeing, for these markets?
Okay, so in the global market, it's been largely bearish, like and no thanks to a couple of headwinds that we've seen in the year, either two. Chief amongst them is the Russia-Ukraine saga that is not going anytime soon, based on what is the projections. Based on probability, we see that the saga might go on. 90% analysts, 92% of analysts believe that it's going to be here until December. So the fears are still there. So for me, it's been a mixture of a bit of good news and bad news. For example, Russia and Ukraine.
So I can hear you.
Okay, so can you hear me?
Yeah, I can hear you. Okay, carry on.
Okay. So, for example, Russia and Ukraine at a point, they signed like an agreement. They saying that they will allow food supply again. So because after they signed, in less than a few hours after it was signed, we found out that Russia bombed one of the ports again. So because of that, that is leaving analysts to think that it might not be as we might not be as excited as should be as far as that is concerned. So wheat prices are still up there. So we cannot say it is out of the window just yet. Now on the part of the energy, so even though the turbine that was blown has been restored, we fear that what's going to happen largely is that Russia will intentionally not allow their supply to go up again, just to make sure that the Europe does not have enough energy, especially as we approach the winter months, so that they can force some of these European countries into this ceasefire according to their own terms. So that might be what we're going to be seeing moving forward. But largely, I think that the market feels that the inflation might be peaking anytime soon, and that is why you have seen a bit of rally, if you like, in some of these equities, amongst other things. So I believe that the market has priced in a lot of the things that are happening just yet, because a lot of the central banks before now had indicated that they will be increasing their policy rate by 100% basis point, 75% basis, sorry, 100 basis point, 75 basis point. All of these things are things that some of these central banks have not done in a long while, because we've had easing for a long period of time. So with some of this easing taken back, and then I see that we might be seeing we might be seeing the end of this, and the market is quite optimistic about that. On a final note, I think that we might be heading towards recession largely. The chance of recession is higher than the it not happening. So because of that, we might be seeing reversal in terms of policy rates anytime soon, just to make sure that there's a balance overall between price stability and growth.
Right. And, since the year began, we've seen, oil and commodities, we've seen those prices surge. And, some traders, who got in there early have enjoyed all of that rally. But some have held through, the equities market decline. Is this the time to sell off, or do you still hold? Do you think the bottom is here?
Okay, thank you for that question. So I think that largely it's not a time to sell, especially for those who have been in the market proud to now. As a matter of fact, what we are telling investors right now is to just, for those who have been in the market, stay the course. stay the course, especially. So it's a time to have a long-time view of the market. So if you have not been in the market just yet, I say I say congratulations, because the market is give or take. You are in a better position if you are picking, if you are going to the market right now. But because you cannot time the market, like we always tell investors, time in the market is better than timing the market. So hence, we always recommend DCA, that is dollar cost averaging method, meaning that you have to just put in that and see what. So if you go into DCA, you don't have to know when exactly the market has plateau or when the market is in the trough. So because your investing kind of strategy is averaging. So I would say, do not sell, hold. If you are not in the market yet, maybe you might just want to have a bit of liquidity on the side, because
Right.
especially because we think that it could be a recession somewhere down the road. So, but if you're in the market already, it's not a time to sell, because if you sell, if you're in the market, then you might just be selling out of. It might not be in the money when you're selling right now.
I guess it's time to have the diamond hands, when it comes to these markets. Thank you so much. That was Shina Olubu, economist and investment analyst. Thank you so much for coming on the program.
Thank you so much for having me. I appreciate you.
All right.